Hello, Nick.
A quick recap. What's the purpose of this show?
Well, the idea really is to look at what's happened in Europe, what's likely to happen in the US this afternoon, try and give people a few clues, a few pointers, what we're looking at, what they might like to look at, and just generally hopefully brighten up their trading day.
Understood. Okay, we've got a number of slides to go through. Let's kick off today with the FTSE 100, the movers and shakers. I beg your pardon, let's look at the data released of the European session.
Yes, indeed.
Getting myself too excited. This is a sea of blue out there.
Right, well, I picked up a couple of European inflation price points here, or data points, I should say. First of all, French even, HICP, which is the ECB's preferred measure of inflation. That's the May number, month-on-month change we're looking at here, came in at 0.2% versus a forecast of plus 0.2 and a prior read of plus 0.1. So there is some small semblance of inflation in the French economy. It's not flatlining or drifting back into deflation just yet. Perhaps the more interesting number, though, was the Portuguese CPI, Consumer Price Index for May, and that was a read of 0.4%, plus 0.4%, versus a forecast of just plus 0.1% and a prior read of 0.3%. So a much better figure in Portugal. I'm always wary of reading too much into a single number, but it is interesting that there should be some, or the signs of inflation.
A little bit of inflation,
yeah.
Understood.
So I think it'd be interesting to watch that, Spain and maybe Ireland as well going forward. And then a number really that's probably the least of their worries, but nonetheless it just serves to demonstrate what problems there are still in Greece. Greek unemployment, quarter-on-quarter change. The unemployment rate was at 26.6%, and that was a gain of 0.5% versus the prior read of 26.1. So still a quarter of the
dreadful number,
out of work, and not too good. However, European equities rally on hopes of a Greek deal. We've heard all these stories before, but the Athens market certainly like the sound of it, and that's Athens equities are up by around 7% as a whole this morning.
Okay, so let's go on to the FTSE 100 movers.
I've picked out just a couple of names here. First of all, Royal Mail Group, trading around 498.5p, down 3.5%. Quite simply, the UK government placed a lump of stock last night, sold 15% of the company, retaining a 15% stake, placed those shares at £5 each, and we're just trading around that placing price for the moment. And then Home Retail, they are up just over 1% at 161.2. An interim management statement from them today, no worse than expected, although it wasn't exactly comfortable reading. Argos, the catalogue business, their like-for-like sales were down 3.9% quarter-on-quarter, and sales at Homebase, the DIY and garden store, were down 1.6%. I know Nomura's come out with a note saying they're going to have a very good second half to deliver on their targets.
A lot of this is going to be about the weather.
It will. We get many more days like today. I'm sure people will be flocking to Homebase at the weekend to buy their garden furniture and barbecues, etc.
Understood. Okay, so let's turn attention to M&A, rumours and movers.
Yeah, so here we're looking at a spin-off potentially from a company called Johnson Controls, which is JCI US, the ticker, and it's considering either a sale or a spin-off of its auto parts division. Johnson Controls is one of those US companies, quite sizable, $34 billion market cap, but probably not exactly a household name to most people. What the management have said is that they want to focus on profitable areas of the business, really, where it could be a global leader. They don't see the auto parts business being necessarily part of their future. Perhaps that's a bit surprising, given that sort of division of Johnson Controls has generated $5.2 billion in revenues in the last quarter and $22 billion of sales overall in 2014, which is roughly half of what the whole group generates. Perhaps the reason that they're looking to get out of it, though, is that the sales growth in that area has been sluggish.
Right.
Managed about a 1% gain over 2014. If we look a bit closer at the sector, the other big names really are Delphi, DLPH US, the ticker there, Borg Warner, BWA US, and Visteon, VC US. If this auto parts division were to be spun off, and if it traded around in line with the major names in the sector already, probably come on with a market cap of around 33 to 35 billion dollars potentially. So in fact, it could if it was at the right valuation, almost rival the valuation of Johnson Group as a whole. So I think that's the point. They're trying to unlock some shareholder value at the same time trying to get out of a business that they don't see particularly got a future within the group. I don't know if you can square that circle, but let's see what the valuation comes out at.
Understood. OK, so let's take a look at the US data points to keep an eye on today. Very quiet week, as
it is.
Talked about.
We've got a couple of points that we can at least get our teeth into today. Firstly, our old friend weekly jobless claims. Forecast here of 275,000 versus the prior read of 276. It's interesting that we haven't seen much of a deviation in terms of forecast given the big jobs number, the payrolls number last week. So keep your eyes peeled on that. And then perhaps more importantly,
US retail sales.
Yeah, absolutely. And the forecast here is for growth of plus 1.3% versus the prior read of no change, i.e. 0%. It's been a very erratic data point, though, this number since December's read of minus 0.1%. So it could go anywhere, but 1.3% or better would be a positive result.
Understood. And to wrap up, let's talk about the US pre-market movers and some chart points.
OK. Well, the first one is Krispy Kreme. We all like a Krispy donut, don't we? KKD US is the ticker there. $17.40 up 5% pre-market. Q1 earnings beat by 2 cents. Sales were up by 5.2%, and perhaps more importantly than all of that, the company says it intends to continue buying back its stock. Yep. Diamond Foods is another one that's better pre-market. DMND, we've mentioned these before, $32 up 4.1% pre-market. Positive momentum continues post the recent figures, and it has to be said that they do look like a decent chart breakout above $31, and they're trading, as I say, at 32 pre-market. In terms of levels to watch today, as far as equities are concerned, all a bit better in Europe and in London. 68.05, the downside now for the FTSE. 68.70, the level we'd want to see taken out to make further.
These are cash levels if somebody's watching
Absolutely.
For the first time. Yep.
Yes, the DAX gone with 11,300, round number psychology there, and 11,383 to the upside, just above the session high. For the S&P, and it must be said there were very strong bullish candles in both the S&P and the Dow last night. 2093 now becomes the downside level to watch. 2108 the upside price, and for the Dow 17,950 on the downside and 18,045 to the upside. Currency wise, a little bit firmer for the euro, so 112.40 on the downside, 112.88 to the upside. Aussie dollar, US dollar jumping around quite volatile way first thing after the New Zealand rate cut, but now 77.07 is our downside level, 77.54 to the upside. The yen continues to rebound after the Kuroda comments of yesterday, so we've got 123.10 for dollar yen there on the downside, 123.90 to the upside. For cable, 154.20 is our downside level now, 154.90 the upside price to watch. OK, Darren Sinden, market commentator, Admiral Markets, thank you very much for your input. That wraps up the Wall Street Crossover Show. We'll be back same time, 1 p.m. tomorrow. Have a good day. Thank you.